Hi, everyone. How's everyone doing today? Alexander, how are you? LZ likes the way US dollar yen is acting. You need yields to keep moving up. I'll take a look at the yen. Hi, Brock, Hugo, Sinatra, and Marco, all you warriors. Thanks for being here and hanging out with us. Hello, Michael, James. So the dollar's trying to rebound here, guys. Okay, we negated this breakout here. Wouldn't be surprising to see what it does up here against the breakout failure, 93.20 or some type of fib retracement. I'm thinking this is going to be a failing rally. Thank you, Alexander. Failing rally into the taper, or maybe Jay Powell says nothing, right? Everyone's thinking he's going to say something. What if he says nothing? And when you think about that, if he says nothing, then the market's probably going to be worried about, well, next month he will. So anyway, that's Fed speak. Interesting little pullback area happening here in the gold based on the daily 200-day. So rejected here. I thought we could get to 1830, 1840. If it does it from here, I'm interested down here. Yeah, he usually does. I'm looking at this level in gold, 1740, 1750, if we get a pullback here. So, I was talking about this yesterday to some traders I work with, and this is what I used to do. Yeah, he could, Michael. And it's not really an excuse, is it? Since I read our vaccines lose a lot of efficacy after 6 months. So, my 6-month mark will be October. That's not that far away. I don't think there'll be boosters available by October. So anyway, I was talking to people today, and this is what I used to do. I'd have so much confidence that I was going to be able to buy this market down here. I'd say to myself, well, Dale, it's rolling over. Why not just short it and ride it down here? Okay, I'll have to read that. Annual. Yeah. Okay. Thanks for that. We have a very informed community here. Thank you, Sinatra. All right, so the point being, that's not the trade. The trade is to be a buyer here. Doesn't mean it's going to go here, right? So if I short it here looking for 1740, and my trade was really a long entry, not looking to be short the gold, but my bias is now bullish after it did this, because if we take this out, you're talking, I don't even want to throw the number out. I'll get someone will come to cart me away. But that's a trade. So I'll be looking for that. Silver, we'll see. Maybe we get a full-blown retest. I'm going to time a silver buy 1692. That's 5. Wow. So that's all the way back to the lows, back to 1700 again down here. Okay. We'll see. If that's going to happen, I would think you're going to get another low in silver coming. And that's probably going to happen if the dollar is good, Scott Henderson. So that would mean that this is not a top to take us down to 91, which is what I'm thinking could happen. I'm not talking 85 and like a lot of the dollar bears. I'm thinking back down to 91 or so to correct this little little ABC, I think eliticians would call it, and then pull back towards 61.8 and then have another one of these. So we'll see. Nasdaq, there's Nasdaq. I mean, it's at new highs, guys, but I know I've said it a few times. like 1,000 times, but I certainly can't be long a market that now look at this RSI reading with this recent low. And I know I've only been right for some short-term stuff here, you know, this and this and this, and it never turned into a top because you know what? You only know if you have a top in the rear view mirror, but that doesn't mean that just because it made a new high that it's any less bearish. In fact, I think it's more bearish now here at new highs than it was here, much lower when it was confirmed, when momentum was well over 70. So, I think we're close. So I don't know if it's going to be after there's a little short-term look. So we blew out the divergence on the 4 hour on the, most of these time frames. See this? But on the last high, we did not take out 70. That's your 2 hour. And even on the 15-minute, you got a little bit over 70. But let's see what happens. Crypto under pressure. I talked about it yesterday. I said I think Bitcoin might be topping here for a pullback. Here we are.
Did you see the AB equals CD completion?
In what?
In Bitcoin.
Oh, up there? No, I didn't.
Oh, okay. It was actually
my yeah.
No, I was going to say
stuff.
Yeah, it was one of those things that God, the market was so overly excited about it reclaiming 50K.
Yeah.
And when I looked at it, I'm like, yeah, I don't know, man, because we hit this ABCD move, and we've been putting it up on ForexAnalytix for the last couple of days on the basic technical analysis, and so you could actually see the chart there. But it's like I think it sucked a lot of people in.
So what do you think? Pull back to about 40K here, Blake?
I mean 42.5 is like that was the breakout point of that big range we were in for the longest time. So I wouldn't be surprised if we see it back there. I'm not a bear, but I do think it got a little ahead of itself, and I think probably sucked a lot of people.
There are some people I've seen some bearish counts where they're calling this like A, and this is a B completing, and we're going to get a C to new lows. I don't think.
Oh well, C would take us down.
Yeah,
below those lows, I guess.
Yeah. So I've seen those counts too.
It's interesting. I did that interview with Lynn Alden. If you guys missed it, you
never miss a recorded interview.
Yeah, right. But just having this discussion with her, it was interesting because I asked her, I'm like, well, when is Bitcoin like the tech boom bust of 2000 2001, and she's like, well, it's had a boom bust like 3 different times in the last 12 years, and it's like every 4 years during the halving process that they go through this. And I'm like, it's like technology, how technology just kind of speeds up everything.
Yeah.
And that's interesting how her perspective was like every 4 years it has a really big reversal, but then regains its composure.
And we're not 4 years away from that.
No, I think we're probably a year out if I'd guess, but
so it could still roll for another year with that cycle.
Yeah. So maybe Bitcoin bulls have some time here.
That's good to know.
Yeah. Anyway,
she's a very interesting analyst, and I think she's really emphasizing. I've seen some stuff she's done recently. I haven't seen that interview, but she's a big believer that this inflation is not transient.
Yeah, she's interesting. Very, very intelligent.
Everyone go to Trader Summit and listen to that interview. Lynn, I've never had her on F.A.C.E. I had a screw up with her once, and I never got her back, but she's good.
Yeah,
she's to go to Trader Summit and listen.
Yeah, she's pretty awesome. And I mean, anyway, it was a good interview. Very, she's a long-term structural dollar bear, and listening to people like that, you don't get, and I have to reiterate this just so everybody kind of understands. You're not going to get an actionable idea from listening to her. Meaning, what I mean by that is, she's not going to say, oh, you should be buying gold here at, the euro's going to peak here at 118, then it's reversing back down to 116. You're not going to get those types of ideas, but when you listen to somebody that has a macro point of view that maybe you might share, it gives you that framework to work with. Like, oh, I'm a dollar bear, doesn't mean you have to be, buying euros all the time or buying Aussie dollars all the time, but I'm a dollar bear, and it really fits into what, my thoughts were as far as, I feel like the dollar, this rally that we're seeing, I'm going to sell into strength. And the reason why is this, that, and the other thing. And she gives you like that framework to really think about, and gives you a lot of interesting things to think about. So you're definitely not going to be disappointed by listening to that interview. Here's
your falling wedge, Blake, that you showed earlier in the week. I'm not sure if we have the same lines, but to me, it looks like a breakout. I'd give it a shot down here if it checked the wedge line and maybe risk the lows.
Okay, so
what do you think?
Yeah, I'm glad that you brought that up. So let me bring up. I'm going to pull up the charts here.
See, we do give actionable ideas.
We do. Now you're in the right place, because we talk about what's moving and why, and at this moment, and that's the difference between, when you're listening to somebody about, oh, give me the big picture ideas,
and a trader,
right? Because we're going to trade I'm going to trade the hell out of the euro or the Aussie or, the loonie, 100 times before, the dollar's done doing whatever it's going to be doing over the next couple of months. So, and by the way, if you're on Trader Summit, you'll notice that interview is right here. The Lynn Alden interview is right there, and you'll be able to catch up with,
what graphics on the site, man.
I don't know who picks those out, but they're pretty cool, huh?
Yeah.
Yeah. Neat stuff. Anyway, all right, let's talk about the euro, and you talked about that wedge, and matter of fact, if you go to I think this was on Friday when that was posted, there's the wedge, right? And then looking for the move up to 117.50,
right?
Which
it did.
Whoops, damn it. Here's the update from today. So this is an hour ago, and here's your 4-hour chart, and there we are now. So the reason why I point this out is because yesterday, when we were looking at this rally back, we identified key resistance for the euro dollar being at 117.55. The reason why 117.55 was key is because
it's been a big pivot all the way through too.
Yeah, it's previous support, resistance here, previous support over here, 618 retracement, channel top.
Yeah.
So let's go pull up the euro really quick and just make sure you can see this on a live chart, because now we can draw it out. Okay, so here's your.
Yeah, maybe it could go to new lows.
Well, there's your wedge, right? So
okay.
My 2 cents is, yesterday we rallied to the 618 retracement. That's why we stopped here. And if you listen to the Morning Edge, by the way, the Morning Edge webinar is for the ForexAnalytix subscribers. We go through all the, key instruments here in the FX market. We identify what the bias is, where the key resistances and supports are, the reasons why we identified those levels, whether it's a fib level or a channel or, wedge support or whatever it is, whatever technical indicators give us a reason why we're, going to find, like yesterday, dollar Canadian, we found support at 125.75. The low yesterday was at 125.78. I actually got long the dollar Canadian yesterday at 87, I think. So anyway, and we talked about that on our private webinars. But the reason why I'm pointing this out is because when I pointed out this 117.55 level yesterday, when we were in the chat rooms, yesterday afternoon, what happened is you saw the euro push above these highs. I'm going to take us over to the hourly chart. Pushed us above these highs, above that 1755 level, just enough to stop everybody out. So this is a good example of just a, summer August day afternoon that no one's around. The market just took out some stops above the highs. Anybody that was like kind of weak shorts, anybody who was a short, like up here around the 117.40s and, that level, they just got stopped out. And that was a perfect setup for a reversal to get short again, because you knew it was a stop run. And matter of fact, this all coincided with the dollar Canadian dropping right down to 125.75 yesterday. The euro dollar, hitting resistance. So if you guys didn't see those levels yesterday, maybe you should try to come into some of our, our webinars here with ForexAnalytix. Remember, you don't have to be.
They should just make an investment in their trading career and become part of our family.
Even for $20 a month, you get the app and you get to listen to all the webinars. For $120 a month, you get, the chat rooms. You get to come in and see, talk to myself and the rest of the team all day long, and
12 pips.
Get the advanced analysis. But yeah, I mean, it's definitely worth the investment into yourself, in my opinion, because then you have a community and you're around other traders. And it's not just me. It's, we have not only just our team, we have a lot of traders that are in our community all day long. Like, this is what our chat rooms look like from, and
Amanda's back.
That's when I got up. Amanda just got back from holiday.
Woodstock, she was at
Forex Flow Room. This is our trades room where you see us, posting all the things that we're, like buying and selling. Like when I got stopped out yesterday for whatever I was trading and I got stopped out for a loss. We just kind of report all of our stuff there. Anyway, let's go back to the FX market. So now you're dealing with a situation where we've got the Jackson Hole Symposium that's coming up over the course of the next, over the next couple of days. And the dollar, I look at where we're at right now, and, I know a lot of people were selling the dollar because, they're selling the dollar because, Jackson Hole's going online. It's going to be an online symposium. And, so, obviously not only the Fed chairman, but, the rest of the central bank governors are going to be completely dovish, because if they weren't, they'd be going in person. But since it's going to be online, we know they're going to be dovish. But I think that is, I don't think that's the right. I don't think that's the way you should be thinking about.
Because they're online means they're going to be one way or the other.
Right. And I think, that's what the market's opinions were over the last couple of days. Oh, they're going to be dovish. Crazy. No, remember, we've got to come out of this. If you think about what not only Fed's doing, but other central banks are doing, and the liquidity they've been providing, they have to. We're not going to be locking down anymore. I mean, yes, Australia is. I don't understand. I still don't get why Australia is locking down with they have like one case in the last 32 days. I'm just kidding.
Locked down 200 days now.
It's crazy. I mean, it's absolutely
I'm glad I don't live
berserko.
there.
But the point I'm trying to make is, if you look at the U.S., we're not locking down. I'm sorry. It ain't going to happen. I mean, we will have a civil war. I'm just saying. You try to, and everybody knows that. So, the central banks have to pull out of this emergency liquidity situation that they've been put in over the last year and some change. It's time. It is time. And I don't think that this Delta variant, because we're going to end up dealing with a Lambda variant, whatever alphabet variant you want to deal with, we're going to be dealing with it probably for an extended period of time. And we're going to have to learn to live with it as far as COVID goes. So, central banks are not going to alter their, become more dovish because of what's happening in the current environment. I think they have to, talk about removing some of this,
Kaplan used the metaphor that it's like medicine that may have helped you early on, but now all the side effects are not making it worth continuing on the medicine, and you have to get off of it.
Yeah. So,
That was, you know,
we have to, and because they have to normalize rates, because we are going to have, when you're just asking for a really big problem with equities where they're at. I mean, let's not forget for a moment that equities are very extended, and the Fed's looking at, they don't necessarily look at this S&P chart and go, but what they are very, very cognizant of is that the stock market, since the beginning of the pandemic, let's talk about that for a
monthly.
second. Well, let's just forget that. Let's just look at February. Let's look at February, the end of February, the beginning of the pandemic. The stock market is
doubled.
Up 30% since the beginning of the pandemic, and they understand that it's not that it's liquidity driven. They understand that they've got to do something because
this whole rally.
Because they orchestrated it all.
They sponsored it. Yeah.
They sponsored it. Yeah, correct. So what kind of problems are they going to have if sentiment changes? Now, what could turn sentiment in an instant is if you start to see stocks really come down, because what is the number of households? There is a record number of households that own stocks right now. And I think, and you know what, actually, Jen's,
our guest today,
Jens Norvig may have some statistics on this, and you should ask him. The percentage of people that own equities in the US would be, I think it's at 60%, some really, really big number. So let's just say we have, and I'm just going to use this as an example. And again, this is not telling you what's going to happen, but let's just say this does happen. Okay. Let's say stocks take let's just call it a 20% correction, because we don't want to get us back into bear territory. Let's say we correct back to 3,500 in the S&P from 4,500, where we're at right now. 20% correction in equities. If you own equities, and let's say you have a majority of your money in equities because you're one of the 60% of households that own stocks, but that big chunk of money, you lose 20% of your equity, you're going to feel a lot less wealthy. Therefore, your behavior in the way you spend money will change. So once we lose the consumer, if we have the equity markets that correct, it's hard to re-engage them. And it's hard to change sentiment once it changes. It's the behavioral part of the economy. The dynamics really start to change there. So the reason why I'm pointing this out is because the Fed's got to have some sort of policy, some sort of defense in order to deal with a potential disruption in the economy, whether it's slower consumer spending, whether it's a correction in the housing market, where, again, this is where a majority of Americans have their store of wealth. So when you're talking about, I'm just referencing really the Fed, but you got to take out every other central bank that's been, jumping onto this, liquidity party as well. We are going to be running into an issue moving forward if the central banks don't moderate their monetary policy somewhat. And so that's why if you're out there thinking, the Fed's going to be super dovish and we're going to push it off till 2021, and I mean, it's possible, but I don't know if I'd bet against that right now. So anyway, there and no one's really talking about the fiscal cliff, upcoming fiscal cliff that we're going to have. I mean, there are a lot of issues that are upcoming that could really slow down our economy.
Look at the RSI there, Blake. I mean, other times you would have to put your cursor up to see if the reading was higher or lower than the prior. But right now, you don't even, it's glaring. Okay. It's not close. It's glaring right now.
Yeah. And I know, like, here's our confirmed move higher in RSI. Yeah. And ever since then, ever since here, well, really since we broke out, you know, post well, let's just call it the end of last year. It's been divergent hardcore since. And obviously we can continue to diverge and continue to grind it out higher, but man, this is very, very, very concerning for the markets. And so I mean, technically, and that doesn't mean, you know, technicals you can call what you will, but it definitely has to keep you on the defensive.
Yeah, I mean, you may not want to short it, but when you want to, but you probably don't want to buy it. And there's a half measure. It's called, if you're in the market and you've been fortunate to be, you know, hold the market this long, there's nothing wrong with bringing the register on a third of your, you know, positions here.
Well, that, you know, that's the thing is, you know, I was talking to one of my neighbors. We were discussing when before the pandemic, my neighbor, they've, you know, got I have to go back like a little while ago, substantial amount in the markets, a substantial amount for, you know, the average person, right? Yeah. And you know, the markets were around the 3,500 mark, and we were talking about, hey, you know, he was asking, hey, you know, this is a little silly here, and what do you think? And I'm like, yeah, you know, I think you should be selling here and buying when the S&P drops to 2,500 again. That was my opinion, because he's a friend, so I just give him an opinion versus, you know, obviously on these webinars I do a little bit more careful about that. Anyway, so pandemic hit, he goes, and as the market was free falling, you know, he's like, hey, guess what? S&P got to 2,500. And I'm like, yeah. And he goes, well, we you know, we bought everything that we sold when it was at 3,300 or whatever, 3,200. I'm like, that's fantastic. Great. And so now we just had this conversation again about bringing the register. And he's like, do you think this is a little crazy? I'm like, yeah, you know, I gave him my opinion. But you think about what, you know, has happened.
Where did you tell him to buy it back? 3,600?
2,500.
Again? Okay.
Oh no, where I tell him to buy it back next.
Yeah, now.
No, he's not worried about that yet. He's not worried about that yet. But the fact of the matter is you know, you have to be thinking that too. I mean, or at least protecting yourself, or knowing where you got to get out. And hey, look, I look at the equity markets and I realize they're very bullish, and the price action from 3 weeks ago, that false breakdown, we were all sitting here looking at the false. Whoops, shoot, I didn't want to do that.
I remember that.
We were looking at the false breakdown, saying, "Do not get sucked in here on the short side," because we couldn't close below that trend line, and that, you know, pull vaulted us to new highs. We know where the market turns bearish. It's actually right here. You can see this little alarm that I've got triggered. Yeah. It's at, you know, 43.50.
Yeah.
While we're above 43.50, there's no reason to be bearish, but shoot, man, if I was long, I would be a little concerned. Now, let me just leave you with a couple last pieces of nuggets. The Euro Mexican peso is one of those currencies that I, you know, watch from a risk aversion standpoint, because when you start to see it percolate higher, that usually means that we're, you know, within a stone's throw away from some risk aversion. And you can just see the Euro Mexican peso tends to rally off this lower trend line. We've got a little pennant set up, right? Well, so the dollar Mex actually has a bullish flag set up too. This is another, when these emerging market currencies look a little weak, that is a pretty big warning sign that risk aversion could be, you know, really, really very close to us. Yeah. The dollar Mexican peso is my chart of the day last week when we were down here at the bottom end of the range. When we got to the top end of the range, I didn't think we would break out, but we did.
See, all that time you spent at Tijuana was worth it. You became a
totally was.
Trader.
Oh, huh? Believe me, the experiences I've got from Tijuana are for like 3 or 4 lives, actually. I tell you. First time I went to Tijuana, I was 14 years old, riding in the back of a pickup truck from San Diego. But anyway, Nothing. No, I shouldn't brag about that. Before
Yeah.
kids were allowed to over in Tijuana without a driver's license or ID back in the
Yeah.
80s,
The free
believe it or
days.
not.
Yeah. Free
Back in
days.
those days. Anyway, the dollar Mexican peso really, is one of those currencies you got to watch. Euro Mexican peso too. And guys, if you want, analysis of all of the majors and all these instruments that all the instruments that you see down here, plus we answer all your questions, then join me for the morning edge. You have to be a member of ForexAnalytix. You could be the premium or light subscriber for $20 a month. So just do it. And then also I need to mention, don't forget to visit our webinar sponsor. Go to Forest Park FX. Just the last couple months, I've been receiving cashback rebates. First time ever, actually. Because for the last 5 years, I was trading through JP Morgan, on an institutional level. So now that I've got like my own, private or not private, personal account that I'm trading again, I'm getting cashback rebates. It's really cool. I actually received checks in the mail, in snail mail. So, by the way, if you want more information from Forest Park FX, you have to open your account through this link to get that. Contact them on Skype, or you can email them directly and ask them any questions. Doesn't matter where you live. Okay. Ask them, and they're there to help. We've been working with them for years, but this is the first time I've been able to do it myself. So just over the last few months. So I'm having fun with it. All right, guys, thanks for tuning in.
Forest Park, if your broker cannot see the forest from the trees, call Forest Park and they'll make it a picnic. And they'll send you money to buy some food for the picnic. Huh?
You are so good. And I don't know how you come up with this stuff. Like I said, I don't either. As a dad, you would have the best dad jokes, guaranteed. Guaranteed. All right, guys, have
Jens is here.
So, all right, have a great one. Enjoy your. I'm going to actually be listening into this this interview because I've been following Jens on Twitter for forever and a day. So I'm excited to hear him. Yeah.
All right.
Thanks, guys.
So good hunting today, Blake. Hi, Jens. Welcome to F.A.C.E.
Hey, can you hear me okay?
Got you loud and clear, Jens. It's a pleasure to meet you.
Okay. Do you want to switch my video on? Or you don't use video?
Sure. Go ahead. Also, if you have any charts to show or you just want to talk, what do you want?
Yeah. So I think there's a setting you need to change to be able to show my video if you want to do so.
No, I don't believe so. You just click the start video.
Yeah, if I do that, it says
mine just came on.
Yeah, yours came on. It says the host has blocked it. So maybe if you make me a co-host, I can show my screen as well.
Okay.
Yeah, unfortunately, I don't have the ability to do that either. I was just looking myself. Good morning, Jens. Thanks for joining us today.
Okay, we can do it.
There you go, Jens.
Okay, let me try. There you go.
There you are.
Yeah. Yeah.
Hey, nice to meet you.
I did comb my hair especially nicely this morning, so I thought it'd be a shame not to use the video.
All right. Yeah, it looks good. What, you have some mousse on there? Look, I have a pandemic haircut still, Jen. So anyway, really nice to meet you. And, I read a bit about your background and I went to your website and, what an interesting career you had. You want to tell our viewers and people will see the video later what the genesis was for you to get to Exante?
Yeah, I could definitely do that. So I worked for Goldman for quite a few years, almost 10 in London and in New York. And I was in charge of the currency strategy based out of New York, a global currency strategy for a number of years. Yeah. And then I had a shorter start.
Go right. Are you a blue blood? How'd you get in there? At Goldman, was it your grades?
No, I studied at the wrong university in the wrong country, so it's definitely not that. It was very simple. I applied for a printed ad in The Economist, and that's how I
Wow.
got the job. So it's a very simple story.
Okay. All right.
Nobody ever heard about my university
Yeah,
or the
I
grade scale we
maybe,
use in Denmark.
yeah, I thought maybe you went to Yale and you're in the skulls and, you know,
No,
they recruit all those guys. So
in Denmark, we use grades from 0 to 13, at least when I studied. So if you had an average of 10, how can you have 10 as an average? It's not even like there's normally 4 is the highest. Anyway, so so I did that. Then I had a brief stint at Bridgewater Associates, and then I became like head of research for Nomura Securities. Different research groups. It was as always complicated with these different groups, but broader than FX. So that was economics, fixed income, even some equity at some point, even though I'm not an equity specialist. So
so how do you like having your own shop?
So I've been doing it for I've been doing it for 5.5 years now. So if you really like to just sit on the couch the whole day, it's not the right thing to do. But if you like to be in control of what you're doing, hire smart people to help you, and build a business. It's a ton of fun. So we have some secret stuff going on in the background. So there's probably going to be some press releases we're going to put out. So if you want to follow what's going on with my company, you can follow me on at either Exante Data handle, or you can do at J Nordwig, which is my own handle. Anyway, so we want to expand. So we have some sneaky plans. So there's probably going to be some announcements in the next couple of months.
All right. Well, we'll keep an eye out for that. And, you know, we're going to make you a nice commercial here today, gents. Good start anyway. And you know, completely spontaneous. So what's on your radar? Blake wanted me to ask you if this is a new record, if you know, I know you do a lot of polling and intelligence gathering that way. Is this a record number of U.S. households as far as being owners of equities at this time?
I don't know the stats for that, but I would think it is. So we'll have to go and look it up. But my feeling would be that it is, right? Because we have so many people who've signed up for the Robinhood accounts and all that kind of stuff that were not involved before, and they in the generation that was had very little penetration before. So I would even without knowing the number, I would bet a lot of money that the answer is yes.
Okay. All right. So. So tell us what's on your radar. What do you think is really critical as summer winds down?
Yeah,
and the hedgies will be coming back from the Hamptons in a few weeks, and maybe we'll start getting some volume and maybe a little bit more movement in the markets. What are you saying to people with the way things are set up here?
So I'm a fundamental guy. So the way I deal with technical aspects of the market is that we do a lot of flow analysis, right? So instead of looking at charts to get a technical picture, which a lot of people are doing, and I'm not saying anything is wrong with that, but we want to do something a bit different, right? So we look at fundamentals, and then the technical dimension really comes from us doing a lot of flow modeling.
Is that like money flow into different instruments? And
so we track those flows. Like we have a whole platform called Global Flow Analytics. We have literally 100,000 time series on capital flows, and that's how we monitor that. So I'll just give you an example, right? So right now, fundamentally speaking, you can argue that we're at a point where we're going into a part of the cycle where we're getting sufficiently close to Fed tightening, not just in taper terms, but in actual terms of rate liftoff, where the correlation to short rates in the US becomes very important for the dollar. Like you have periods where that correlation is not very important, but when you get within 1 year liftoff, it tends to become very important, like you saw in 2016 and in 14 for that matter. So we're getting to that point. So if you think the US economy is going to do okay, you can say, okay, rates are going to continue to drift higher, euro dollar is going to be under downward pressure, right? So that's sort of the fundamental view. The problem with that fundamental view is that the systematic players in the market are already extremely short euro. So maybe I'll show what I mean. Let's see if I can share my screen here.
And let me ask you this: having written the book Fall of the Euro.
Yeah.
All right, you're a Renaissance man, Jens. You're an author and everything. Does that give you some type of bias on your narrative? And that was published, what, 8 years ago?
I don't think so. I'm a pretty pragmatic guy. I've traded the euro very long last year. We've had some long expressions earlier this year, but at the moment it's different. So I try not to get stuck.
All right, but come on.
It's up there, by the way.
Huh?
It's up there, by the way.
I know, that's what I saw. Anyway, yes, and you could go right to Amazon to buy it. Do you still think, though, that it's an experiment eventually bound to fail based on what you may have written back then?
It's really all about politics, right? So we had a euro crisis that played out from 2010 to 2012 mostly.
Yeah.
And they put in place various insurance mechanisms to make sure that we couldn't have like just a financial crisis unraveling everything. So they've done that. They did even more here in the pandemic because it was maybe not quite enough what they did in that period. So it's all about politics. Are all the different countries willing to vote in a way that means they are staying or not? So we have to watch the French election as we did 5 years ago when it comes up, right? So it's about politics. So that's really what
is it about Lagarde? Is it about Lagarde now as much as it was about Draghi?
Draghi was a bit of a special character, but in terms of sort of being a unifying figure, Lagarde would have some of the same qualities. Obviously, used to be a finance minister in France, right? So she's very connected to fiscal policy. I think from an economic perspective, the euro construct is a very vulnerable construct, but it all comes down to what people are voting. So I think Italy is a good example, right? You can look at the surveys, like how popular is the euro? So the EU is not very popular in Italy, but people don't want to get rid of the euro. They know it's better than the lira. So that's kind of what holds it together, that you have a hard currency. Some people in Bitcoin space will say it's not a very hard currency, but relatively it's a pretty hard currency. And you can see what's happening to EM currencies around the world, right? Some of them fallen 50% here in the pandemic. So that's what people do not want to have.
Well, if the Greeks in their situation and go back to the drachma, and things were even more desperate than in Italy, right?
That's right. That's right.
Then. So if they wouldn't break away, who would break away now?
No, I think that's exactly the right thing. So we've seen, the UK was different. Like they didn't have the currency, right? But the politics there were different, right? So you have to analyze each country's politics. It could also be that there's some Eastern European countries that some of them have the euro, some don't. But it could be that they have totally different politics where an exit is different. Like the question I'm always getting is, when is Germany going to say enough? That analysis, I think, is pretty easy because of the Second World War, because of the politics there, them abandoning Europe is just unthinkable. So that's not where it's going to come from, in my view. Can I show one picture to you?
Yeah, sure. I'd love to see it.
Yeah, go back to the original question there. So
all right, and you would click. Oh, there you go, Jens. Okay, beautiful. All right.
So I'm just showing some of our data now. So I'm going to go into some of the positioning stuff that we do. Just look at CTAs. I'm going to show you aggregate dollar positioning in the systematic trading community. So, for example, if I just click here, this is just a summary of what the dollar positioning is in systematic trading space. So all the CTAs that follow mostly trend following rules, right? So you can see we came into this year with that community being more than $200 billion short. And now we've been through a phase of pretty dramatic accumulation and we're meaningfully long, like close to $100 billion worth, right? So to go back to this euro dilemma that we have from a trading perspective, and I think the reason you want to be pretty tactical right now is, I can come up with a pretty good fundamental story why euro dollar needs to break. And we did try to break 117, obviously, last week in the risk aversion phase. But if the Fed comes into play, I can see a fundamental argument. The problem is that the systematic community already has it. They already have the dollar longs now. And when you have dollar longs, you definitely have euro shorts, right? That's where you get the big size.
So maybe just a shakeout move that could take the euro back to say 120, 119, and then a resumption of the dollar bull trend.
So when we analyze these positioning metrics, right, we look at where the level is, and then we look at exactly the triggers for when it's going to be washed out. So I don't think there's any catalyst for it washing out right now. Right. But it's something that if we started to drift higher, then it's hard to hold on to your position, because then the washout is going to come, right? So you have to be careful, very careful with your stops, I would say. That's what I would say. So if you're trading the euro short, you have to be very, very careful with your stops here. That's
so what do you mean by careful with your stops? More tolerance than usual, giving your trade more room to breathe?
Well, it depends really on what your horizon is, but I would say this is a situation where if something goes wrong in a fundamental view, and you actually go into a real washout phase where the CTAs flip, then you're going to have a 3-4% move. So you probably don't want to take that amount of pain. Yeah,
can't wait for 3-4% moves.
No, exactly.
Can't wait.
No. So so that's where we are on that. Just in terms of big macro stuff. We are more than 18 months into a pandemic, right? And what I find absolutely amazing is that we have a company where we essentially deliver macro strategy to institutional investors, right?
And you're still working remotely.
We're still working remotely. And over the last month, I would say 50% of all the macro questions we get are still COVID related. It's just unbelievable, right? And where it's been interesting from a trading perspective is places like Australia, right? So the countries that are interesting, where you can really kind of forecast the virus and forecast what the currency is going to do, are the places where they have elimination strategy, where they still like take dramatic action against cases, right? So we've seen that in Australia, and we've seen
200-day lockdown.
Yeah, and we've seen that even in New Zealand, right? Okay, they have one case, and then they lock down the capital, right? So those countries are very vulnerable to cases, at least until they get more of the population vaccinated. So I would say right now we are focused on Australia. Like, what's going on with Australia that's interesting? Okay, they can have a longer lockdown that is expected. There's also something going on with iron ore prices. Iron ore prices have really turned over the last month or so. China has different policies with iron ore that could be problematic. There's the broader dollar trend, US dollar trend that could come into play if the US yield curve start to move again. There are some vulnerability. We've already moved, so I would say at this point in time, we would probably do a flip where we say, okay, let's flip from having spot exposure to optionalized exposure. In the sense that we think there is actually meaningful downside still, but we've already moved, right? So it's a sort of different way to manage your stops.
70-80% of the move is done. Is that what you're thinking?
I think, 70 is probably like, there could be another 30% left, something like that.
Okay.
And then if we actually hit like big figure 70, like maybe they can sort of change the mindset for some people. But I think that's one thing to look at.
Will the US ever shut down again? Jens?
I don't think so.
Okay.
So
you agree with Blake? There'd be a revolution here?
I think you can just see it. We have some states that have pretty dramatic situation, right? And lockdown is not even being discussed.
Right.
Like we're discussing whether you should wear a mask here and there. That's very far from lockdown. So and also maybe I'll show just I actually track. I put all a lot of our COVID analytics we put on Twitter. So we actually put it out there, so you can track some of the same analytics that I track, and I can go into the ex-ante data feed here, and I'm just showing literally what you can see, right? So if I just show you what's on there from today, you can go and track the pandemic. So these are some data analytics that we put out in a algorithmic way, right? So if you look at what's the sort of global heat map of cases, you can see that Australia there still on a week-on-week basis growing like 80%. So they don't have it under control. If you go to the US, which is up here at the top, this is a daily thing, right? So we're growing 11% week on week in the US. That came from 30% a couple of weeks ago. So, so things are improving in the US, and there's also, I think that probably the best indicator is look at, okay, how many people are coming into the hospital in California and Florida and Texas, those big states. And in Florida, that has been very much in the press. It looks like the hospitalizations are just plateauing. So that's something that I think is important. I think next couple of days might see a descent there. I think that's going to change the sentiment a little bit. So I just went into my own handle there. If people want to follow what I'm saying, they can do that. And I'll just show you one chart that I sent out yesterday. So this is the Florida hospitalizations, and you can see the red line there. It's just starting to plateau in the last week. It hasn't come down yet, but like a plateau is the leading indicator of a descent. So hopefully the school reopening and so forth would not create another spike. But if it wasn't from the school reopening, I would pretty high conviction that we're going to be in a peaking phase in a lot of US states. And it kind of makes sense, right? The states that had the first outbreak in the US, Louisiana and so forth, are already coming down in the Delta wave here I'm referring to. Yeah.
Okay, let me, can we switch gears to the Fed? Since everyone's waiting for Jackson Hole and, you know, the powerful words of our Fed chairman telling us everything will be okay. What are you thinking here, gents? Everyone thinks Powell's going to say something. He may just say nothing. What do you think?
That's definitely a possibility. So what I try to do into these events, I try to say, okay, let's try to sort of be inside his head, right? Yeah. Because like the danger with Fed watching is you look at something that he said a month ago, and you say, okay, that's what he's thinking. But you really have to put yourself inside his head and say, what is he thinking right now? What is he thinking right now? He doesn't know exactly what Delta is doing. Nobody knows, right? And there's definitely creating some uncertainty for him. We've had some data points that are weaker, like retail sales were softer and so forth. He's hoping that's going to bounce back, but he doesn't know for sure. There's also some of the alternative data for hiring that we look, and I know the Fed looks at it as well, that is showing some softness in the restaurant sector, right? So we're probably not going to get 1 million gain in payrolls next month if we have like some slowing there. So those are the things that he's worried about. On the other hand, the underlying trend in the economy has looked very good, and inflation is so high that they can't be super relaxed. So what does that mean for him? It means he does not want to box himself in. There's no upside in him saying, oh, we're definitely going to taper in September. Why would he commit to that when he's just in front of some data releases that are going to make him a lot wiser? In addition, they've already communicated relatively clearly that tapering is getting closer. It's not that they have to say anything new, right? Everybody is expecting it November and December. So I'll be pretty surprised if he says something that is very clear, incrementally clear, I should say, relative to what they've already said. So I think actually the only thing that really matters to me at Jackson Hole is, okay, is he going to clarify how much inflation overshoot they really want to tolerate? But I think we've gotten much more clarity on that in the last couple of months. 2.1 and 2.2 is really what they're looking at. It's not 2.5. So that's one aspect. The other aspect is like, how concerned are they really about this Delta wave? They communicated a month ago that they were not very concerned. Has that changed? That is going to be irrelevant. But I think we're in a mode here where the data is going to speak. Like last year the data didn't matter at all. Like we had huge trends in all markets, and it didn't matter whether data came out this way or that way. But now it does matter, right? Because policymakers have to be precise. I don't normally spend a lot of time on forecasting payrolls, right? Because everybody's forecasting payrolls, and it's hard to beat the market on that day. It's not like when I was at the desk at Goldman, we were trying to beat the market every single time, and we could even beat the market after the number was released, right? Because it took a couple of seconds for it to react. It doesn't take a couple of seconds anymore. But this number is an interesting one because there's a lot of things going on. So it's probably one of those where I'm going to forecast it well in advance. and get ahead of the pre-positioning. So get ahead of the people who are getting ahead.
You're front running the front runners.
Yeah, I don't like
All
that
right.
word for compliance reasons, but in
Yeah,
essence, yes.
Compliance. So forgive us, NASD and FINRA. You know what, gents? What do you think of this? I know these data points are important. I know that the uncertainty of COVID is important, but here's me getting inside Paul's head. My term is almost over. I may not be renominated. There's talk that Yellen would rather have, I forgot her name. Do you know who I'm talking about? She's a
Brainerd.
Fed. Brainerd.
Brainerd. Yeah.
So why should I do anything to upset my legacy going out? And can't that mean more to a Fed chairman than any kind of data or uncertainty of COVID? Is how do I get to the finish line without a problem?
Yeah.
What do you think? You think he'll be
I-
renominated?
I think he probably will. I think he probably
interesting. Okay.
will.
Is that in
So-
his head then?
I think everybody who's in his position is clearly an extremely prestigious, honorable position to have had, right? So you're definitely going to think about, I don't want to make any mistakes. And he's been pretty balanced. Like we all remember the first press conference he had where he looked a bit shaky, but since then he's gained some confidence and he has a balanced approach.
Sure, after he sang Kumbaya with Yellen and Bernanke after the tightening, and he reversed, I think they called him on the carpet, right?
Mm-hmm.
And he flipped and has been one, as good a dove as anyone out there. So I've never seen a hawk converted that quickly.
Yeah, no, that's what I meant. He's a balanced guy. He's not like locked into a certain position. Like I think he tries to absorb the information as it comes along. So I think actually what he has said about the inflation target really reflects that, because when they announced this average inflation targeting, right, where we started to think about, okay, how much overshooting will they allow? The way he phrased how they were thinking about that, I thought was very kind of descriptive or telling about who he is. He said, okay, we're going to decide essentially about how much overshooting we're going to allow once we see all the conditions associated with that overshooting. Like if you had an academic economist, they would have been tempted to lock themselves into like a specific mathematical formula, and it probably would have been a disaster. So I think that shows that he's a pragmatic guy. And I think that means that he doesn't know what the right policy is yet to preserve his legacy, whether it is to stay on hold for longer or hike. Like his legacy will only really be known whether it's the right move in 10 years' time, right?
Yeah, in the rearview mirror.
Yeah.
Yes. All right. Well, Jens, I really enjoyed our time. And I want to thank you. You're a currency guy. Our most valuable currency is time. Money comes and goes, time's gone forever. And thanks for spending some of your precious currency talking to us at F.A.C.E in our community and really opening our eyes to some great insights. Really enjoyed it and want to thank you. Plus, you're now my trading warrior brother. That's you survived an interview with Dale Pinkert. You're a brother now, buddy.
I would say thank you, and then I would say I was very impressed that you invited me to speak at this. I think 4 months in advance. It's one of the earliest invitations I've ever gotten. So you're definitely early.
Did you have enough time to prepare for this?
Thank you.
I know I've been working on it for 4 months. So thank you so much, Jens. Would love to have you again. Good hunting.
Okay, thank you. Bye-bye.
All right. Jens Nordvik, everybody. And that's a wrap. See everyone tomorrow. What's tomorrow? Thursday. Okay, Silver Bulls tomorrow. Oh, you're welcome, Monica. He was great, wasn't he? I'll make a prediction. He'll be on Traders Summit. So I'm glad you guys enjoyed it, and you can join Blake in 16 minutes. So you guys, just join. All right. I mean, you know, the adults will be back from the Hamptons in a week and a half. Get used to navigating, get to know some guys in the chat room. You know, if you're new, there are people there that will help you. Okay. Don't be afraid to ask for help and show and learn new things. So, you know, become part of it. And I'll see everyone tomorrow. Remember, don't just count your pips, count your blessings. Adios, everyone. Good luck today.